right. Thank you everybody for listening in. We're Grizzly Research, and we are going to present today our short thesis on Hebron Technology. The company is traded on the Nasdaq Stock Exchange under the ticker HEBT. Let's just talk for a minute about who we are. We're Grizzly Research LLC. We are an activist short seller. We are focused on producing differentiated insights on publicly traded companies, and we are not afraid to share our insights with the public if we deem our insights worthwhile sharing. You should check out our website and our Twitter. Nathaniel already gave a very kind introduction. I'm your presenter today. My name is Siegfried Eggert, but you can call me Ziggy. I'm the CEO and owner of Grizzly Research and manage our team here. This is our full legal disclaimer. You will find that on the website, and you want to read that very carefully. But I won't read that out for you here now. So we won't make it till 11:30. All right, let's talk about the company itself and about the thesis. So we believe Hebron Technology is an inside enrichment scheme, and we also think that there is no economic basis behind this company. So essentially, it's a textbook example why we need tighter auditing standards on US listed China-based companies. Let's talk a little bit about the company in general. So HEBT stock price has really skyrocketed in the last year since June 2019. And before that, it has been a very disappointing story. The IPO was conducted in 2016, and ever since then, the company had been fading to a stock price below $1. Because of Nasdaq listing requirements, they were also facing a risk of getting delisted at that point because of the minimum share price requirement. Over the last year, the stock price, of course, skyrocketed from below $1 to over $20. But the problem is that all major transactions of during the last year were supposed and were announced to be arm's length transactions with third parties. We were able to link every single one of these transactions back to the insiders of HEBT and their biggest shareholder, Bodang Leo. This really confirms our belief that this is an inside enrichment scheme, and the publicly traded company is really essentially worthless. So let's talk just a moment more about the background. The legacy business is developing, manufacturing, and customization and installing of valves, pipes for industrial settings. Rather boring business, low growth business. The IPO in 2016 was conducted with Spartan Securities Group. It's a pretty shady underwriter, and that company is not even licensed, registered, or active anymore. As I said, in 2019, Bodang Leo got involved. And I'll tell you a little bit more about how exactly Bodang Leo got involved. Bodang Leo got involved in 2019 by selling a fintech company to HEBT, receiving a ton of shares in exchange, and concurrently buying a lot of shares from existing shareholders at a steep discount to market price, at a 70% discount to market price at the time, which then at that time made him, and until now made him immediately the biggest shareholder of the group. So they effectively gave over control to Bodang Leo. Let me talk a little bit about the legacy business. So everything that was before 2019 and before June 2019, that was the only business. Now, we pulled filings from the State Administration of Industry and Commerce in China. These are filings that companies in China have to make to their authorities, and these filings are usually accurate. And historically, it's been very fruitful to take these filings, if you can get your hand on them, and compare them to what is reported to the Securities and Exchange Commission. Big differences in these filings, reported numbers in China and in the US, are usually a big red flag and key tell for fraud. In the case of HEBT, these numbers are as outrageous as we've ever seen them. So up to 90% difference in revenue is something that I don't think you can or anybody can explain away with an accounting difference. So this is our first hint here that the legacy business is just completely inflated, and everything that they reported to US investors might have been just a lie. We, of course, went a little bit further. So after looking at the SIC filings, we said, well, let's go to the company and look at their valve business, see what's going on there, see if there's people working, see if it looks like a great business. So we visited. the building that we show you on the pictures look actually quite decent. HEBT does not own this building. HEBT rents 1.5 floors on that in that building. And we were told by multiple locals in interviews, that the headcount right now is 20. So there's 20 people working there. In 2018, HEBT last disclosed their headcount to be 88. Now, so it's one of the two: either the business has just plummeted dramatically since then, or they have been lying all along. I don't think that either explanation bodes well for the company. We also want to mention in that context, that the auditor track record is just a giant red flag, and something that investors could have and should have seen. So who signed off on all these what we believe to be fraudulent financial statements? Friedman LLP was the auditor until 2019, mid 2019. Friedman recently made headlines because they got subpoenaed over their involvement with iFresh, used to be traded as IFMK. So this is just new news. Weiwei LLP, Weiwei & Co. LLP is their new auditor. Sounds like a China-based auditor. In reality, these guys are based out of Flushing, New York. We also took a couple of pictures there, and they have no audit partner actually, or no partner in China. They have been the auditor of notable exposed frauds such as CIFS, which was exposed by Muddy Waters, or most recently HX, which is a company that's under attack from Bonita's research. So it seems to us as if Weiwei is carving out its niche as the auditor who's willing to sign off on anything. All right, so let's talk about the aspects of the business where we really think the fraud happened and really the inside enrichment happened, which is since June 2019, Bodang Liu got involved, and then this inside enrichment scheme really gained traction. So here's a little bit overview of the events following Bodang Liu's involvement. As I already mentioned briefly, in July 2019, Bodang Liu sold a company to HEBT, and at the same time concurrently bought a huge amount of shares from existing shareholders at a steep discount, at a 70% discount. So this is how he got a hold of the company in the first place. In December 2019, HEBT conducted a PIPE at a private placement in public equities. Somebody was willing to buy shares of HEBT, just normal common shares, the ones that are traded, at a substantial premium to market price. That's of course a big confirmation for a company. Unfortunately, we were able to link the buyers here back to HEBT insiders. In December 2015, they had the big Hengpu acquisition, and on May 22nd, 2020, so just recently, they announced the big Nami acquisition. So these are really the significant events, and we'll go through them here one by one. So the Shanghai FinTech business that they acquired in July 2019 from Bodang Liu looks to us very, very sketchy. Now, here are reasons why we really don't, I explained that here already, why we really don't believe that this company is actually a real company. So in its recent 20F, HEBT disclosed the segment financials for the financial service segment. As you can see, they made about $2.5 million in revenue. It's a 99% gross margin business and about 60% net margin business. Now you believe what you want, but we tend to not believe these numbers or think that this is a business with that margin profile that is absolutely not scalable. Shanghai FinTech is an online financial platform for individuals to be connected to insurance or banking products. The company itself doesn't have any licenses to provide any financial services themselves, so they're just acting as an agent or middleman here. We think the company is probably not that hot. For example, in the last 30 days, they had a total download of 2 for the app. So that doesn't really seem as if the company is even active at all. So essentially, we think that HEBT significantly overpaid for an inactive business. Let's talk about the undisclosed related party transactions. Now we come into the actual hot stuff, where this is violating outright SEC regulations every step along the way. So in December 2019, HEBT proudly announced that they found investors who want to buy their shares at a substantial premium. This is, of course, a very confirming signal for the market. third-party investors who have substantial amounts of money, who probably vetted the company diligently, are willing to pay a substantial premium to acquire shares. Outside people would think that this is a great thing. And we think that's just a scheme to pump the stock. We were able to link the buyers here that were portrayed to be third parties back to the insiders. And I want to walk you through this example here. So the two people that signed off the contracts as the buyers of these shares are two directors of the respective companies called Xu Shandu and Shan Jiang. Now, these two individuals are actually acting as agents of Bodang Liu, the main guy here and HEBT's biggest shareholder, in multiple capacities. So they're acting as supervisors or legal representatives, or even as shareholders of companies that are either directly owned by Bodang Liu or share the same corporate email address, corporate address and phone number with a Bodang Liu controlled company. This is not a mere coincidence. And these relationships have been in place way before any acquisitions were even in the talk. So this clearly established, in our opinion, that there have been prior relationships, and we believe that Xu Shangdu and Shan Jiang are nothing but agents of Bodang Liu. So this is just an outrageous, undisclosed related party transaction to pump the stock and fool US investors. That's our opinion. Let's talk about the acquisition, the next acquisition that happened. So they raised money in early December 2019, and now that they got money, about a week or two later, they decided to buy this great company, Beijing Hengpu. Also supposed to be an arm's length transaction with a third party. We were also able to link this back to insiders and actually conclude that this is an undisclosed related party transaction. The transaction was not announced at the time. The transaction was snuck into their 2019 20F, which was just released a week or two ago. It was an all-share deal valued at the time at $11 million. One thing that we want to mention about the Hengpu transaction first. Now, about 6 months after this transaction was supposed to be consummated, according to HEBT, we find that the ownership has not been yet fully transferred. So in an acquisition like this in China, you would find a share pledge of the sellers to the buyers. Now, this hasn't occurred yet. So technically and also legally speaking, as we speak right now, HEBT bought for a company that it never got ownership of, never acquired. That's just the first outrageous thing with this acquisition. The second thing is that, once again, it's an undisclosed related party transaction. Director and legal representative of the seller here have been legal representative, directors, and agents of Bodang Liu's companies in multiple instances. Now, this network is rather extensive, and I don't want to bore you with too many Chinese names that I pronounce incorrectly here. So you'll see the whole rundown and full relationship map in our report that we will publish. But here's a short overview. Basically, all the people that were acting as representatives and directors of the sellers are also acting and have been acting as agents of Bodang Liu and HEBT in the past. And they didn't even cover up their tracks that well. It was fairly easy to find. This company that they acquired here, Beijing Hengpu, we also want to comment at least briefly on the fundamental value of this company. To make a long story short, we think it's entirely worthless. It's once again a financial service platform that connects service providers like banks or insurance companies, so financial products with customers. So they're just the middleman. On their website, on their platform, there's currently no products that you can buy. So there's nothing that you could buy there. I don't know how they are making money at this point. And the two products that we could find were supposed to be paid back over 3 years ago and are obviously late on payment for over 3 years, which doesn't really look encouraging. This company here, Beijing Hengpu, has the particular spin to lend to companies that are in China listed on tier 3 stock exchanges. So very low quality companies, and we think just not viable business model overall. And a look on their website confirmed that there's no activity. Let's talk about the latest acquisition here. May 22nd, 2020, it was announced. A NAMI acquisition, also announced to be a acquisition at arm's length from a third party. Once more, we were able to link this back directly to insiders and Bodang Leo, HEBT's biggest shareholder, who we think is the main guy to profit here from this insider enrichment scheme. So the transaction was valued at about $25 million with $1.5 million, about 1.5 million shares and about $7 million in cash. So we have multiple hints that NAMI is actually an undisclosed related party. For example, here in this instance, what I show you here on the screen is a job recruitment posting. And the company on the job recruitment posting actually says that, you know, the company listed on the left, Hu Yingjin Fu HR and NAMI Financial Consulting are one and the same company. Now, NAMI Financial Consulting, we understand it's NAMI. Hu Yingjin Fu is actually a company that's controlled by Bodang Leo. So why do Bodang Leo companies recruit on behalf of this supposedly completely unrelated company? It's a very weird thing. Oh, 1 second, I think yeah, here's our second piece of evidence. One of the sellers here has been acting already as a Bodang Leo agent in the past. So, for example, he was a legal representative and shareholder of a company that shares the same address, corporate email, and phone number as the Bodang Leo companies, and also as HEBT's current Shanghai FinTech company. So this once again makes the very, very strong case that the relationships between these individuals that we're dealing here were established way beforehand, and all the sellers here that write down their names are just acting as agents of HEBT's biggest shareholder, Bodang Leo. The third piece of evidence here is that there's media reports which actually mention the two sellers here, Xin Liu, 15% seller of NAMI, and Jinbao Li, 85% seller of NAMI. Multiple media articles mentioned these people as being basically employees of companies that are controlled by Bodang Leo. So these guys are just employees of his and are presented to US investors as being outside third parties that they haven't known before. This is just outrageous, and we think because our findings are so clear and our evidence is so clear, and we've submitted our evidence to the Security Exchange Commission, this is a fairly obvious example of wrongdoing, of investor abuse, and also, in our opinion, the prime candidate to get enlisted and see SEC enforcement. One more thing about the NAMI acquisition here. I just want to mention that business model here. It's also a online financial service platform. It's a P2P lending platform actually, but we think P2P companies here in China are seeing major headwinds. Businesses see very, very depressed valuations, and we think rightfully so, because regulators in China are going hard after peer-to-peer lending platforms in China. So was this NAMI acquisition worth $25 million or more? No, we think actually this business is entirely worthless. Nobody would be willing to pay anything for it because what you get essentially is a defunct business and some legal liabilities maybe on the back of it. So nobody should be willing to pay a cent for that. All right, to sum this whole thing up, again, you know, in June, July 2019, Bodang Liu got involved and HEBT bought their Shanghai FinTech segment. In December 2019, they had their big pipe. Also in December 2019, a big acquisition. And now in May 22nd, 2020, latest acquisition. So what's the net here of flow? This graphic here gives you an explanation. So because in the private placement, actually, the insiders paid some money for these shares, and we would assume that they actually, or hope that they did, suspect that they didn't, but hope that they did. The company actually received some money, but then immediately paid out that money in the acquisition a week later. So net, the company, HEBT, sent Bodang Liu and his agents $500,000 and shares that are right now worth about $220 million. What did HEBT get in return? Well, no cash, and three businesses that we think are entirely worthless. That we think if there's a credible, real third-party buyer, wouldn't be willing to pay $5 million even for all these three businesses combined. So that's a very, very sad state of affairs. And we think also now that we've called the company out, there will be more attention here on the situation. This basically concludes our presentation at this point. As I said already, we'll be uploading our report at 11:30, which gives you the full background and all the details and all the background information, our sources that we've used for our report. And this concludes our presentation, and I would like to open up to the questions.
Very good. Thank you, Siggy. Interestingly enough, this stock was down 8% at the start of trading today and is down 17%. So you are welcome. Everybody appears to have already profited from this. Hopefully they will remember that when it comes time to sign up for the next conference. But anyway, so you were short here originally back in December, right? And what has changed since then?
No, we were not short in December. I think what is worthwhile noting is that the company, when the stock price first pumped and really started to make a move, I think GeoInvesting, which is a great online services, and you guys had Marsh on here as well, very good guy, and they first smelled that there might be something wrong with the company. So that's worthwhile checking out. All this information that I presented here, you had to see the latest 20F, which only came out a week or two ago, where they disclosed all that. And I think now the time is really to look into a short position. No, we're not financial advisors. That's just like my personal opinion here. But being right and making money are two different things. And at the end of the day, if you want to stay around, you better make sure you make money. So timing is in these, especially fraud situations, something that is a factor you got to pay attention to.
Wow. Okay. What is the borrow?
That depends. I think borrow is readily available on most brokerage platforms. I also didn't see it to be hard to borrow, so it should be a reasonable fee. These things, though, might change relatively quickly. If you're able to get borrow now at a reasonable rate, that's great. But I can't promise you that you will be able to get borrowed tomorrow. These things change, especially with smaller sized companies. Now, this is not a micro cap by any means, about $500 million market cap and a NASDAQ listed company, but it's still not as giant as a Facebook or anything like that. So you got to pay attention to these factors, as you rightfully pointed it out.
Yeah. Okay. Wow. This is really something. So what, how did you find out about this originally?
So, I think this one is one that you could have found really easily on a stock price screen. So 52-week high, 52-week low is a screen that's very simple one that we look at frequently. And, sometimes you just see companies where the performance seems too good to be true. Like you're wondering, okay, well, like what happened here? Did these guys just cure cancer or and then you look into what happened and then you figure out, well, this is very not exciting or actually looks to be nonsense. And then you take a deeper look, as we did, for example, here, put the SIC filings so that the revenues are up to 90% lower in China than what they tell US investors. Then we go, of course, the next mile and visit their facilities and interview them and interview locals and try to figure out what's going on. Then we look into all the acquisitions and try to become customers there on these platforms and say, well, this is a great financial service platform, then let's try and test it. And when you're at this point and you can't even become a customer, yeah, you're onto something. But how we found it, just simple 52-week high screen.
Wow, that's really simple. Amazing. Okay.
Let me maybe comment. I think you're just to give you a little bit more color. I think on where your question's coming from. Finding like the ticker in the first place is not necessarily the biggest challenge.
Right.
There is no replacement for digging through the SEC financials, reading the conference call transcripts, talking with people who know the company well, talking with people who used to work for the company, maybe suppliers, customers, stakeholders of different kinds. And when you do that type of work, you really figure out what's going on. So we probably looked at I looked at a bunch of companies in the last week that have big fraudulent aspects, which I should have discovered and I just didn't see. So it's not about not knowing the ticker.
Very interesting. Okay, any other questions? I don't see any popping up on the Q&A. Great. All right, wonderful, Siggy. Well, thank you again so much. You are obviously on the Twitter as well.
Yes.
Grizzly, I forget, what's your...
Let me see. Yeah, it's at Grizzly Reports, I think. But you should, like, if you just Google Grizzly Research, you should be able to find it, yeah.
Very good stuff. Awesome. Well, thank you so much for addressing this with us. And again, you'll be circulating this out at 11:30, and the recording of this whole thing I'll put out later, probably tomorrow or later today for attendees. Awesome.